This is the Nightly Business Report, made possible by the Digital Equipment Corporation with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. By Kidder Peabody, for over 120 years, one of the world's leading investment firms, serving the financial needs of individuals, corporations, and governments. Kidder Peabody, professionalism worldwide. And public television stations across the nation.
Good evening, everyone. The board of directors of Ponderosa, the steakhouse chain, today slammed the door in the face of investor Asher Edelman, recommending that the firm's shareholders turn down Edelman's offer to buy Ponderosa stock. Ponderosa described Edelman's $27.50 a share bid as inadequate, excessively conditional, and not in its shareholders' best interests, and said the company will now consider other alternatives, including a recapitalization, restructuring, or third-party transaction. Edelman, who just renewed his offer to buy the Lucky Stores supermarket chain, could not be reached for comment. Linda?
Bank America says it's still not taking up a takeover bid from First Interstate Bancorp. In an apparent attempt to force the issue, First Interstate yesterday submitted an application to the Federal Reserve Board for approval of its $3.4 billion bid for Bank America, in what analysts say may be the first shot in a hostile takeover attempt. Bank America had asked First Interstate to withdraw its proposal until it completed an extensive internal review of its business strategy, and says it very much regrets First Interstate's refusal to wait. Paul?
Yesterday's 5.25-point gain in the Dow Industrial Average broke a string of 3 consecutive losses. But just an hour before Monday's closing bell, the Dow was up 15 points. So that late sell-off extended into early trading this morning, and by 11 a.m. the market was down almost 8 points as losing stocks held a 7-5 lead over gainers. During the mid-session hours, prices showed gradual recovery after traders were encouraged by an easing of volume on the downturn, as well as by speculation that this coming weekend's meetings between Treasury Secretary Baker and his European counterparts might bring about a coordinated round of new interest rate cuts. By 1 p.m., the Dow was off a bit less than 2 points, although losers led gainers 8-5. That deterioration in the advanced decline ratio and the development of a negative spread against stocks in the futures market prompted increased selling pressure for the remainder of the session, and the Dow Industrial Average proceeded to fall to a closing loss of 13.36, putting it at 1916.90. The high of the day almost to 1940, the low down just below 1910. Trading volume today well down from yesterday's pace, less than 129 million shares. Down volume exceeded up volume by about 50 million shares. The Dow Transport's taking a hard hit off 12.21, utilities losing 0.86, Dow 65 off over 6.5 points, and there was a sell-off going on at the final bell, as you see the closing tick minus 354. Standard & Poor's 500 off nearly 2 points, better than a 2.25-point loss in the 400. The 100 off 1 3/4 points exactly. SPOC 250 down 0.85. New York Stock Exchange Index off just over a point, almost a 2-point loss on the NASDAQ Composite. Value line off nearly 1.5 points on the Wilshire 5000, off just over 17 points. The bond market closed mixed, but mostly lower today after an early rally based on speculation that Treasury Secretary Baker's meeting next weekend with its European counterparts might result in more coordinated interest rate cuts, failed to keep buyers active throughout the session. So we see the long-term treasuries down 8/32 on the close, a half-point loss to 101.5 bid on the GMAC corporates, but the bond index rose 0.34. There's your mixture. Jacksonville Municipals losing 5/8 to 99.25 bid, and finally Fed funds under 6% all day. That was a little encouraging. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets today, gold, platinum, and silver all closed lower, with gold losing $3.30 to finish at $387 an ounce. On the New York currency markets, the dollar closed higher today, finishing up against the mark, yen, and Swiss franc. While the Canadian dollar was unchanged, the British pound lost ground against the greenback. And while oil prices fell in New York, they were marginally higher in London. Dun & Bradstreet today joined a growing list of American firms that are abandoning their South African divisions. The publishing and financial services firm says it's already begun divesting its South African operations, which account for less than 1% of its overall sales. Meanwhile, the man who established equal opportunity principles for major corporations doing business in South Africa, the Reverend Leon Sullivan, said today he doesn't think the current trend of corporate pullouts will hurt efforts to end apartheid.
I see the companies as a tool and a catalyst to bring about fundamental change and the ultimate elimination of apartheid. And I think the withdrawal, in my view, of General Motors, the withdrawal of Kodak, the withdrawal of Coca-Cola, important primer on the South African government, and to realize that United States companies will not continue to do business in South Africa as usual if the system is not ended.
Of the 184 companies that have signed the Sullivan Principles, the minister said fewer than one-third are making good progress toward equal opportunity. And he said unless significant improvements are seen by May 31st, he will make specific recommendations on how to begin a complete U.S. boycott of South Africa.
At least in part as a result of the yen's climb against the dollar, Japan's trade surplus with the U.S. declined last month to $4.9 billion. Japanese exports to the U.S. fell from a record $7.5 billion in October to $6.9 billion last month. But the nation's imports from the United States also fell to just under $2 billion in November. The November figures brought Japan's total trade surplus with the United States so far this year to about $46.5 billion.
Well, American auto parts makers say they'd like to ship more of their products to Japan, but have few buyers there. In an effort to change that, boosting U.S. auto parts exports to Japan is one of the items under discussion in the Moss trade talks between the U.S. and Japanese governments. But the American industry's advisor to those talks, William Raftery, says the Japanese market is so hard to crack that American parts makers would consider themselves lucky even to get orders from Japanese car makers in this country.
I think it's somewhat unrealistic to expect the Japanese vehicle manufacturer original equipment market to open up to U.S. suppliers in any great degree. We have offered to sponsor a joint U.S. warehouse in Japan if there is sufficient interest on the part of Japanese vehicle manufacturers to purchase U.S. parts. In the meantime, I think what we can expect is that the Japanese should use and probably will use more U.S. parts on those vehicles that they are exporting to the United States.
Raftery says American auto parts that have the best chance of winning customers in Japan are either specialized parts tied to Japanese auto design or emission control devices needed to meet U.S. requirements.
An auto industry trade journal says General Motors' $750 million buyout of ousted director H. Ross Perot may cause a delay in the introduction of some new GM vehicles. The publication, Metalworking News, says the depletion of GM's cash reserves may put off introduction of a new mid-size Chevrolet scheduled to be offered in 1989. The journal says other GM projects that could be delayed are a new front-wheel drive minivan and the restyling of the automaker's front-drive luxury cars.
Well, the stock market was in reverse gear today, but it wasn't a hard driving sell-off, really. Let's have a look at the Dow Industrial close. Still off 13.36, but the volume wasn't particularly worrisome, although the decline advance ratio was a little hard, 2-to-1 in favor of losers. And we see quite a few more new lows than new highs, 15 to be exact. Topping the active list, Pacific Gas and Electric trading ex-dividend by 43 cents a share, down 3/8. Carter Hawley Hale gaining 1 point after dropping nearly 6 points yesterday after the Limited dropped its hostile $60 a share sweetened buyout bid. British Gas Corporation, which went public on the New York Exchange yesterday at $7.11, coming down a bit on profit taking. Detroit Edison was unchanged. It goes ex-dividend by 42 cents a share tomorrow. American Telephone was down 3/8. It's teaming up with Boeing to bid on a huge $4.5 billion government contract. Allegheny Power ex-dividend down 1/8. Philip Morris ex-dividend was up a point. Baxter Travanol ex-dividend was up 1/4. And Chrysler, believe it or not, was ex-dividend today. It was down 3/8. IBM wasn't ex-dividend, but it was down 3/4, 10th in volume. AMR, parent company of American Airlines in that weak transport group, falling a point, and the rails were weak today. Burlington Northern falling 1.5. Bank America edging up 1/4, as you noted earlier. First Interstate pursuing perhaps a hostile bid for it. General Electric down 1 1/4 on profit taking. Kroger up 5/8. The company said it's going to buy another 5 million of its own shares in the open market. Lockheed down 1 3/4. The company has set up a poison pill to thwart any possible hostile buyout bids. United Technologies moved up 3/8 today. The company says it's going to have a fourth quarter loss, but a full year profit, and it will eliminate some 11,000 jobs next year. Fisher Foods up 1 1/4. The company couldn't explain the strength in its stock. Culbro gained 2 points. The company has declared a special distribution of $12.84 to shareholders at the end of the month, and that's the distribution of funds from the sale of its smokeless tobacco unit sometime back. CP National up 2 3/8. Merrill Lynch recommended the stock today. U.S. Air for the second day running, a big loser, off 2.5 points. A lot of analysts don't like the idea of the company paying $400 million for Pacific Southwest Air. Armstrong World, second day in a row, another big loss. The company can't explain it. Stop and Shop off 1 3/4. No word or information from that company. Over in the American Exchange, a loss of 1.42 in the index. Trading volume moved up 1.6 million shares from yesterday's volume, and declines led advancers by about a 3-2 margin. Wix companies topped the active list on 640,000 shares. No change there. No change in Gulf Canada. Husky Oil down 1/8. Brown-Forman Distillers lost 1 7/8, and Comenco off 1/8. Warehouse Entertainment dropped 2 3/8. The company reported third quarter loss of 1 cent versus a profit last year, but it was mostly due to the loss of some investment tax credits. Magnet Bank, second day in a row on the downside, off 1 1/4. Shareholders a little bit disturbed that the bank has not come up with an agreement to merge with First Federal of Pittsburgh. NASDAQ, a loss of nearly 2 points in the index. Trading volume up of nearly 6 million shares. About 14 stocks down for every 9 higher. The 100 index off nearly 2 points. Apple Computer topped the active list, off 1/8. MCI dropping 3/8. U.S. Healthcare down 1/4. Genentech lost 1 1/2. Telecommunications off 1/4. Henley Group lost 3/4. Intel off 1/4. Finally, a winner. Glaxo Holdings up 1/4. Tandem dropped 7/8, while Valley Utah Bancorp gained 7/8. Atlantic Research, a big move up 5 1/4 points. The news there: Klaber has 7.6% of the stock and is seeking a merger. WD-40, well-lubricated gain of 1 point. The company boosted its dividend from 28 to 32 cents quarterly and declared a year-end special of 20 cents a share. Galileo Electro-Optics plunging 5 3/4 points. The company says its first quarter earnings will not be up to street expectations. Well, my street critique guest tonight is Mr. Joseph V. Battipaglia, Vice President of Research for Gruntel & Company in New York City. Given the fact that the month of December generally has many cross-currents affecting investment strategy, I asked Mr. Battipaglia how he thinks the stock market will wind down this year of 1986.
Paul, actually, we think the market's going to wind up with a bang at year-end. The reason we feel so strongly about it is for a couple of reasons. First of all, from a flow of funds point of view, we see the alternative investments being unattractive. Overseas markets are extended to a degree. The real estate market is in a tumult over tax law legislation. And the third element is that gold and silver, the hard assets, have a real cost to carry now.
How about the triple witching hour? You obviously think it's going to be a plus?
Well, I think by and large, the steps that the SEC has taken, the hesitancy on the part of investors in that environment has caused that to become a non-event, at least as far as this quarter close is concerned.
Well, you're so bullish on all accounts, Joe. How about the if something should come out of the Iran scam investigations or Boesky, that type of thing? Could that ruin your scenario?
Well, it could, but the only problem there is that we've had these hits already. For example, the Boesky scandal hit. We lost 50 points in 2 days, but we recovered more than 120 or so following that. So I feel that the market is showing you by its resilience that it's ready to move ahead.
Are we talking about staying with blue chips in here, or maybe starting to delve into the NASDAQ market?
I would say stay with the blues through the rest of the year, and as we go into the first quarter, people start feeling the ropes, they'll start broadening out, and the secondaries are going to do very well.
All right, fine. So next year you're bullish for that too?
Yes, that's right. I think we're going to see 2,000 and beyond that, maybe 2,500.
All right. Thank you very much, Mr. Joseph Battipaglia of Gruntel & Company. We appreciate your being with us.
My pleasure.
And that's our Wall Street wrap-up.
One investment that's lost some of its luster since the enactment of the tax reform bill is the limited partnership. But as New York correspondent Neil Cavuto reports, limited partnerships aren't just for tax shelters anymore.
Most individual investors may be at least familiar with the stock market, but not so with investment partnerships. Surprising considering the fact that partnership money goes into everything from skyscraper office towers and experimental drugs to popular movies and even top-rated basketball teams like the Boston Celtics. There is one nagging problem about investing in a partnership of any sort. You really can't check how your investment is doing on a daily basis, and that scares a lot of people. So many, in fact, that individual investors are generally not too anxious to invest in partnerships of any sort.
Historically, Neil, partnerships have not been a well-understood investment opportunity.
But Investment Partnership Association President Christopher Davis says all that could be changing, mainly because partnerships themselves are changing. During the 1970s, typically big real estate partnerships were used to shelter income from taxes. But beginning in 1976, a series of tax law revisions lowered maximum tax rates from 70% to 50%, and under the new tax law to 28% by 1988. At that lower rate, tax shelters don't look so attractive anymore. So sales of shelter-oriented investments like real estate are down 2.3% from last year. Oil and gas drilling buy-ins are off 65%, and equipment leasing partnerships are down 45%.
Anything that's designed to generate a tax loss will be eventually not beneficial at all.
It takes the industry out from under the negative connotation of shelter. Too many people thought partnership investing was simply tax shelter play, and that there is no more tax shelter.
Now, there are still those who have their doubts about whether individuals are going to come in droves to the partnership market, but nevertheless, those involved in the partnership community insist it is very likely that a year from now, there will be so many individuals involved in partnerships of all sorts that it will no longer look as if partnerships are dominated by a select few investors. In New York, Neil Cavuto for the Nightly Business Report.
Coming up, in tonight's Money File segment, Marshall Loeb talks about the consequences of not having a will.
By a 3-to-1 margin, purchasing managers of the nation's manufacturing industries expect the economy to grow at least through the end of next year. Responding to their latest semi-annual survey, 64% of the purchasing managers also said they expect prices to rise over the next 6 months, although most said they expect the price increases to be moderate and confined to selected areas. The executives also expressed concern about the impact of several factors on the economy in 1987, including tax reform, oil prices, and the dollar's exchange rate.
Tonight's Money File segment features Marshall Loeb, managing editor of Fortune magazine. In his remarks, Loeb has some pointed reminders for the 60% of Americans who don't have an up-to-date will.
What's the biggest financial mistake anybody can make? If you ask me, it's the failure to write a will. A good, valid, up-to-date will. There's no way without a will to leave whatever you have to whomever you want. If you do not have a will, then your worldly goods someday may go to people whom you do not want. Worse yet, the tax man will take an even larger share of it. It's a tragic shame that almost 3 out of 5 Americans do not have a will. Many others have an outdated will. Their family situation has changed since they wrote it, or the tax law has changed. In fact, the last big alteration in the law was in late 1981, so if you made out your will before then, you'd better change it right now. You may think that you do not have enough assets to create a will. Nonsense. Almost everybody has something, and even modestly paid workers for companies with generous benefit plans can have quite large estates. Once you've made out a will, review it every year or two. You may want to change your will if you move, particularly if you move from a common law state to a community property state, or vice versa. In a community property state, any assets acquired during a marriage are jointly owned by both partners. But in a common law state, assets are owned by whoever buys them. So, how do you go about drafting a will that does what you want? Well, you could buy a do-it-yourself kit for a few dollars, but that's probably not smart. You could easily make a mistake, like not having your testament notarized, and angry relatives whom you leave out in the cold could challenge your will. They could make life really tough for your real loved ones. It's much wiser for you to go to a lawyer. He or she will not charge you much. A simple will should run a couple of $100, maybe even less, and that will be money well spent. Just think, it's better to give a little bit to a lawyer than to leave a lot to relatives whom you don't like much at all, or to your good old friend and partner, the tax collector. I'm Marshall Loeb.
Recapping tonight's top stories, Ponderosa's board comes out against a takeover bid by investor Asher Edelman.
In the high-stakes game on Wall Street, a wave of selling prompted by a negative spread against stocks in the futures market leads the Dow Jones Industrial Average to lose more than 13 points, closing at 1916.90. Looking ahead to tomorrow, we'll report on the city chosen by business leaders as the best place to locate a business. And now with tonight's last word, here's Paul.
'Tis the season to be jolly, and that means it's also the season to buy Christmas trees. And as Scott Gervey reports from Chicago, Christmas tree buyers are in the driver's seat this year.
Now, this Christmas tree may be a little too large for your living room, but in fact, Chicago City Tree is made up of 40 smaller trees, and you may be in the market for one of them. For growers in the $1 billion Christmas tree industry, it has been a record harvest, and the National Christmas Tree Association says that means good news for consumers. A good supply of high-quality trees at prices the same as last year.
We got balsam, we got spruce, we got pine. It's about 3 basic ones.
Prices?
Prices are, our average price is around 35 to 38.
Prices were rising rapidly 15 years ago, and that encouraged heavy planting, which, because of the long lead time, is now producing a glut of trees and keeping prices flat.
It takes about 10 years for a tree to mature. We get them when they're about 5 years old. It's about 15 years before they're big enough to cut.
Analysts say the glut will continue. This year, the harvest will be more than 32 million trees, but 90 million were planted. 3 out of 4 American homes have Christmas trees, and they are split 50-50 between artificial and natural. Rising in popularity is the farm where you can come and cut your own tree. For many families, it is a special occasion.
So much fun to look out and see all the little children running around in all their snowsuits and bright colors and listen to their happy laughter.
It takes about a dozen years for a Christmas tree to reach cutting height. That means these little fellows are safe from the axe for a while. It also means your local tree farm probably has a limited number of trees to sell each season. You should call ahead if you're interested. In DuPage County, Illinois, Scott Gervey for the Nightly Business Report.
Scott, nice to see you all spruced up.
I think you should stop needling, Scott. That's it for this edition of the Nightly Business Report for Tuesday, December 9th.
For Linda, for Paul, and for all of us at the Nightly Business Reports, good night.
The Nightly Business Report is made possible by Kidder Peabody. Our over 120 years of investment experience is an arch to build upon, serving the financial needs of individuals, corporations, and governments. Kidder Peabody, professionalism worldwide. By the Digital Equipment Corporation, with its new generation of VAX family computers, connecting headquarters, branch offices, production and research centers into a single integrated computing environment. Digital has it now. And public television stations across the nation. For a transcript of this program, please send $3 check or money order to NBR Transcripts, P.O. Box 12724, Overland Park, Kansas 66212. Please include the date of the broadcast.